How did I make $825 trading Microsoft call options? So looking at Microsoft at 1310 on the 30-minute time chart. 1310. Let's see. Okay, so basically this candle right here, the 1330 candle, as soon as it landed on the as soon as it landed on the not the 180, but the 200-day moving average, I waited for a bounce off the 200-day moving average, and then at 1331 I sold out the position. So literally at the opening candle of this candle right here, the 14 candle. So basically at the open I sold out at 455, and basically when I sold out the position I made an easy gain of $825 trading Microsoft call options. So this trade was pretty short, pretty easy, and it's just like I've been telling you, pretty much telling everyone that you're basically trying to use the moving averages as support or resistance, and then basically you're trying to manage your risk tolerance level. Whether you're trying to aim for a high percentage target, by all means go for it. If you're trying to aim for a small percentage target, go for it. Now if you're trying to cut your losses, try to be careful. Me personally, I try to cut my losses. If I don't feel comfortable in the position or I'm not feeling really confident, I cut my losses once the position is down 10%, move on to the next trade and try to aim for instead of a typical 10% gainer, I try to aim for a 20% gainer. And basically, I mean, this is my personal way of trading sometimes, but like I said, my way of trading is a little bit more different than how you would personally trade. Everyone has a different risk tolerance level. Maybe you're a person that is a risk taker and tries to aim for 50% gainers, or 100% gainers, or your risk tolerance level of where to cut your losses is a little bit different than mine. I usually cut my losses depending on the position. If it's down 10%, I cut my losses. Sometimes if I'm feeling a little confident in the trade, I'll go according to my risk tolerance level, according to that day, or in that position that I'm in. Everyone, it's like very different for everyone to trade. So basically, why did I buy calls on the Microsoft when it landed on the 180-day moving the 200-day moving average? Reason was because, well, I mean, if you can see here, basically how you see this, the moving averages on the chart. Basically, when this happens, that the 9, the 20, and the 50-day moving average look exactly like that on the chart, and when the 180 or 200-day moving average look like that, basically that kind of means that the particular stock will enter into an uptrend or will slightly go up during that day. And so when I saw that, I was like, okay, I'm pretty sure that's if for whatever reason Microsoft does decide to approach the 200-day moving average, I'll expect a bounce from Microsoft if it uses the 200-day moving average. If not, it'll probably bounce off the 20-day moving average. That did happen. It bounced off of it, and when I sold out the position, right, on the 14 candle on the opening, that's how I basically made $825 trading Microsoft call options. So basically, here's a way that you could manage your risk tolerance level. So okay, let's say, so for me example, right, okay, I got into Microsoft call options as soon as it landed on the 200-day moving average, right? I expected a bounce. That did happen. And so when that bounce occurred, everybody's like, say you're like a first-time trader and you're like, well, when do I sell out? When do I sell out, right? So here's a way that you could go around it. So as soon as you see that bounce off the 200-day moving average or the 20-day moving average, what your next step is going to be is, as soon as this next candle, the 14 candle, approaches the 9-day moving average, basically sell out as soon as it touches that 9-day moving average. Now, will that always be 100%, I guess you could say, will that always be 100%, predictable of happening every day? No, that's not going to happen every day. Just being realistic with you, that is not going to happen every day. So what you could also do differently is, let's say you bought, I don't know, let's say, like how you did with me, right? Let's say you bought Microsoft call options as soon as it landed on the 200-day moving average. What's your next step? So what you could do, right? Let's say you don't want to use the moving averages as your indicator to sell out the position. Okay, pay attention to your percentage. So pay attention to your percentage of your position by how much up it is. So basically, if your position is up 15.15%, and your goal of your percentage target of making a 20% gainer is, if your percentage target is making a 20% gainer, okay, sell out the position as soon as the position is up 20%. Or if your position, or let's say your risk tolerance level is when your percentage target is as soon as the position is up 10% or 15%, okay, sell out the position for that 10 or 15% target and move on to the next trade, and do the same thing like you just previously did. So that way you're not stuck of like, oh man, should I sell or should I still hold? Usually when you're, either if you're day trading, swing trading, or buying leap options, typically what you want to pay attention to is the expiration date. Basically, the shorter expiration date, so the shorter the option is, the less value, and as time passes, that option decays. So what I mean by that is, let's say you want to aim for a 10% gainer, but your position is up 5% and it's having trouble approaching that 10% gainer, and then you let it ride out to the next day. Now, instead of your position being up 5%, it could be now worth being up 3% now. So basically, as time passes, that option or those contracts that you're holding on to are losing value over time. So basically, that's why you want to have in mind of like, okay, I want to sell out when my position is up either 10, 15, 20, whatever your personal risk tolerance level is, sell it out. And, if you want to use the moving averages as indicators to when to sell out the positions, right? Or you want to use different indicators such as the RSI, the MACD, etc., right? Use those indicators. That way that position can work in your favor. Me personally, I had the most success with using the moving averages, and according to my risk tolerance level. Everyone's risk tolerance level is a little different. So that's pretty much it. This is not financial advice. If you want to learn how to trade options, purchase my ebook located at worldly41.gumroad.com. That's pretty much it. As always, take care. Bye.